Your savings account is actively losing you money, and no one told you this growing up. Seriously, the only thing your bank account protects you from is having a fatter bank account. But here's the real kicker. At the very end of this video, I'll share a trick I learned from Warren Buffett and Benjamin Graham that could make you richer than your wildest dreams, or at least richer than your friend who still lives with his parents. So how do you turn your savings into investments? It's actually pretty simple, but not easy. Step 1. Figure out how much you can afford to invest. This is where most people get stuck. They think they need thousands of dollars to start investing, so they never even try. But the truth is, you can start with as little as $100, or even less. The key is to make investing a habit. Set aside a small amount each month and watch it grow over time. Step 2. Choose an investment strategy that fits your goals and risk tolerance effectively. There are countless ways to invest your money. Stocks, bonds, real estate, crypto, NFTs. Just kidding on that last one. Less. The important thing is to find an approach that aligns with your values and long-term objectives. If you're young and have time on your side, consider taking more risks with growth-oriented investments like stocks or real estate crowdfunding platforms. If you're closer to retirement age or have a lower risk tolerance cap, or aka scaredy cat syndrome, focus on safer options like bonds or dividend-paying stocks. And if all else fails, just buy Bitcoin. Kidding again. Sort of.
Step 3. Automate everything. The best way to ensure consistent progress towards your investment goals is by automating contributions from each paycheck into designated accounts for different purposes, e.g. retirement savings versus short-term goals. This takes emotion out of decision-making while also helping avoid lifestyle inflation creep over time. Here comes my favorite part, psychology. Did you know humans are hardwired for instant gratification? We crave immediate rewards, even when they come at long-term costs, because our brains evolved during times when resources were scarce and survival depended upon quick action rather than delayed planning ahead, which explains why we love spending money now, instead saving or investing later. But here's another twist. Research shows people who delay gratification tend to outperform those who don't across various domains, including finance. So next time temptation strikes, remember this. Every dollar spent today could be worth much more tomorrow if invested wisely, instead wasted frivolously now.
All right, folks, let me leave y'all with some practical tips before signing off. Start small, but start now. Don't wait until someday arrives, because trust me, it never does. Educate yourself about different types investments available and choose ones aligned with personal values, goals, and risk tolerance levels accordingly. Automate contributions wherever possible so progress becomes effortless over time. Remember, patience pays off big time when it comes building wealth through smart investing habits. But here's the thing. Even if you do all of these things, there's still one more trick that could take your wealth-building game to the next level. And it's a trick I learned from two of the greatest investors of all time, Warren Buffett and Benjamin Graham. You see, most people think investing is all about picking the right stocks or timing the market perfectly. But what Buffett and Graham understood is that true wealth comes from owning assets that generate cash flow over time. In other words, instead of just buying and holding stocks for capital appreciation, hoping they go up in value, focus on acquiring assets that pay you regular income streams, like rental properties, dividend-paying stocks, or even your own business. This approach not only provides a steady stream of passive income, but also helps protect against inflation and market volatility. Plus, it allows you to reinvest those earnings back into more income-generating assets, creating a virtual cycle of wealth creation. So if you want to build real long-term wealth like Buffett and Graham did, start thinking beyond just saving/investing for growth alone. Look for opportunities where can earn consistent returns while also preserving capital over time. So there you have it, folks. Turning savings into investments isn't rocket science, but does require discipline, patience, courage a long way too. Don't let fear hold back from achieving financial freedom you deserve. Take action today and watch future self thank you tomorrow morning after waking up next door neighbor mansion. And remember, as Warren Buffett once said, the best investment you can make is in yourself. So keep learning, growing every day. And who knows, maybe someday you'll be giving advice to others too.